The governor of the Central Bank of Nigeria, Godwin Emefiele, says the old 200 Naira notes will be made available in all commercial banks starting today, in line with President Buhari's directive earlier. That the denomination remain a legal tender for the next 60 days until April the 10th. Godwin Emefiele was speaking earlier today at the presidential villa in Abuja, where he appealed to Nigerians to remain calm. The CBN chief says he has met with the executives of 15 commercial banks to ease the sufferings and inaccessibility of Naira cash.
And I think I can only just appeal to Nigerians, let's allow this policy to work. This policy is one policy that goes to solve the problem of reducing corruption and illicit financial flows. This policy goes to resolve some of the problems in the economy. This policy also goes to reducing the level of insecurity in the country. So these three issues, which are the tripod of this administration's policy, are all embedded in this policy. We should just allow it to work. We keep saying this. There are some temporary pains, but I can assure Nigerians that the long-run benefit to Nigeria is overwhelming, and we should just give it a chance to work. The President has given his directives. I have met with about 15 banks this morning later, and we've given them directives about how they should make all the old 200 Naira notes available, effective today. And I can assure Nigerians that this will help to reduce the pains. We meet with the bankers at least once daily to get feedback and the rest of them. And I think we should just allow this policy work. The pains, temporary pains, are regrettable, but I can assure Nigerians that it will be well.
Moody's Investor Service, one of the three leading global rating agencies, today released a new report headlined around the pressures that Nigerian banks face in the FX market. The report highlighted the consequences of foreign currency crunch on the banks as well as the economy. Chatting to me now on the new Moody's report on Nigerian banks is Joshua Odebisi, is the head of banking research at Vertiva Capital Management and Investment Banking Group. Thanks for coming in on the show tonight, Josh. Great to have you. Thank you.
Thanks for having me.
Great. Summarize this latest Moody's Outlook report for me.
Well, it's a very comprehensive report, but essentially it's highlighting a few of the risks that Moody's, the agency, sees with regard to a few things, specifically currency swaps, default risk, and things like that, and how any kind of systemic shocks to the foreign currency could affect the banks, hypothetically speaking. But to start off, I think they do highlight the fact that this situation is unlikely, by which I mean that the chances of any kind of default by the CBN on the currency swaps that they have with the banks, with a lot of the banks, is highly unlikely. The CBN has a very strong track record of repaying those swaps. Not only that, the tenor of those swaps has reduced over the years, and most of them do not extend past 12 months. It used to be about 24 months before, but now it's at about 12 months. Essentially, the risk of any kind of massive default on the dollars that the banks have lent to the CBN is very low. That's the first thing to highlight. But then it also goes on to speak about the amount of dollar liability and dollar assets that the banks have. They say that the banks have about 18.2 billion in total liquid dollar liability, to about 40.2 billion in, not liability, sorry, I mean assets, dollar liquid assets, and then 40.2 billion in dollar liabilities. Essentially, that means that the banks have a significant amount of dollars to cover their short-term liabilities, their exposures. And so that again points to the fact that the banks are at a lower risk of default, but they're still highlighting the fact that due to the current issues in the economy, i.e. low crude oil production output, and the poor oil receipts and FX receipts from that, could potentially affect the CBN and the bank's ability to pay back any kind of short-term loans.
Had FX risks really been, foreign currency risk, had it really been an issue for Nigerian banks?
No, not at all.
Despite the exposures we saw to a couple of sectors like oil and gas, which part of what and telecoms, part of which were in dollar terms.
Sure, but the thing is that currently, if you look at NPLs are very strong and very healthy. Not only that, it would take a significant deterioration in the official, exchange rate to cause a pretty big shock to NPLs, which would then affect capital and the rest. But at the same time, we have to give to the banks that they've got some very strong risk management policies in place.
You don't see a major, huge devaluation on the horizon. If you consider where we're coming from last year, some folks thought by now we'll be well above 100. Seems that hasn't really happened. Do you see that happening this year?
No, I don't. And even the reports does highlight the fact that they expect any kind of devaluation to happen very steadily and, at a gradual pace over time. But again, going back to the banks, the truth is that the risk management has been solid over the last few years, especially if you want to go all the way back to 2016, you can see that they've put in some very, very strong risk management policies, which means that they are less exposed to risk. And so that just means as long as there isn't that huge drop in the exchange rate, you are not going to see a significant hit to NPLs.
Where is the weight right now in terms of how banks are lending? Are they lending more in Naira, or you think they still have a significant segment of the economy in which they'll be lending in foreign currency terms? Who needs it?
Okay, so the thing about it is that whichever way you look at it, because of their risk management policies, you need a significant guarantee in order to get any kind of FX loan. Right, so whether it's from the bank, so whether it's a letter of credit or whatever it may be, yes, you do need to go to the CBN and get a currency swap agreement in order to get that loan. So they are very, very well backed. And at the same time, the proportion of those loans on the bank's balance sheets has not been growing in recent years. I'd say it's been shrinking slightly. So I don't think that there is that much foreign currency exposure, at least compared to 2020, at the start of the pandemic or whatever. It's been gradually decreasing. And then not only that, generally, the NPLs, the balance sheets have gotten a lot healthier. If you even look at First Bank, for example, one of the banks that had a pretty significant, NPL above 5%, they've managed to, through a few rearrangements, cut that down significantly. So they're even doing a lot better. So even the banks that were at risk before are even less so now. And I think that just goes for the...
So even with banks that had exposure in terms of Eurobonds outside, the Zenith Bank, the Access, Fidelity, I guess, and a few others, some of them got out around the COVID-19 period and all of that. You don't see any major pressure there out for them?
Well, because of the way the swaps with the CBN are arranged, yes. First of all, there's no liquidity challenge with them if they had to repay any kind of Eurobonds. But most Eurobonds that the banks currently have on their books are not due in the 2023-2024 period anyway. So they've
some of them exited quite early, like Zenith
So
Bank.
Because those guys exited early, they have less of it on their balance sheet. But any other ones that are on their balance sheet are not coming due in the near to medium term, really. So there's a pretty wide buffer in those terms. So I think that all round the banks are covered.
So what will you consider as a major risk issue now for the banks as of today?
Well, like I mentioned, the biggest issue is if the government doesn't go through with their proposed or their removal of the fuel subsidy, because the truth is that's
by June.
Yes, but if they start by April and are able to completely exit by June, I think that we won't even be talking about FX liquidity challenges at that point. And hopefully at the same time, crude oil production continues to improve, because those two things together means that the government has way more dollar to play with. The CBN has more dollar to give to the banks and to defend the currency. I mean, obviously, the optimistic thing would be that the exchange rate starts to come down, but at the very least, it won't deteriorate at a faster pace. It would definitely not deteriorate to the point that the banks would have to be worried.
So we got the elections and transition just within this next few months. So what are you hearing from the banking industry in terms of how banks and other within the industry are a little bit nervous about the transition, what they think the next move will be around the central banking? Will there be new policies from June and all of that? Do you think they're beginning to get a little bit worried? Do you sense that out there?
Well, I don't get that sense, simply due to the fact that we've gone through, transitions in the past, and we've come out on the other side fairly unscathed, I would say.
Not badly hurt.
Yeah, not badly hurt in any way. Even if there are some policy changes at the CBN for whatever reason, I think that the banks are in such a solid position, risk management-wise, capital-wise, non-performing loans-wise, that they'll be able to weather those storms. Maybe those policies may affect the revenues if they are to do with things like, the NPR, or to do with things like transaction costs, or things around that nature, or a significant change in policy surrounding foreign currency and their swift payment or repayment of their swaps, because that could be a big issue.
We haven't heard much about FX, foreign currency management circular from the central bank in recent months.
Yeah, and I think that
seems to be a huge one for 2021. 2021. For 2022 begins, we now seem to be dealing with Naira, as it were, local currency unit.
And the long may that continue. I think the less the CBN talks about the dollar, the better for us as regards to things like foreign investors. Because the more you continue to harp on about these dollar restrictions and that dollar restrictions, the more skittish international investors become. So if you're just focusing on your local currency and you want to deal with it from the other angle, as long as you're not mentioning the dollar, it's fine.
So with the situation of time, you think we should be able to start attracting foreign currency inflows? What more needs to be done? We've seen a number of reports in the last 2 weeks, Moody's, Fitch, almost everyone in the room, including the world. Everybody's talking about about the currency issues in Nigeria and why we need to unify the rates a whole lot more. What do you see ahead?
Well, of course, rate unification would be ideal, but the only way you're going to achieve that is either by attracting way more foreign currency into the system, and if you can't do it through our, reliable crude oil or, PMS deregulation, then you are going to have to do it by becoming more productive in other areas of the economy. Now, those can only be achieved through policies. The CBN itself can only do so much. I mean, the CBN has been acting more like a development bank for the past few years, but even they cannot do what is necessary to make Nigeria more productive, to earn more FX. Only the government can do that. Only we and local businesses can do that. So if that is not the main policy drive, then there's very little else that can be done to instill confidence in foreign investors. Because that's what this is all about, is investor confidence. If investors are confident that they'll be able to get their dollars when they enter the market and they will get it at a good market rate, they will come, as long as they know they can exit. That is the only thing that they need to do, is to have an assurance that, okay, we come in, we make our investments, we know that in 12 months from now, we will get our money back. If that can't be guaranteed, they will stay away, as they have done.
But that's been very difficult for us to achieve. Is it because just we have absence of FX, or just we're not just productive to be able to have the FX that can provide that liquidity in the vault that foreign investors can say, or the central bank can say, well, anytime you come in, knock on my door, you get your money?
Well, I mean, like you mentioned, it's purely down to productivity, right? We're not producing enough crude to sell on the market and get FX receipts. If we were producing at the same levels or the same levels we were producing in 2014, we wouldn't be having this conversation, honestly. If we were producing well over 2 million barrels a day and it was all coming into the excess crude account, all coming into the CBN, we would not have this conversation because there would be enough on ground. So productivity has been our issue, not just crude oil productivity. Productivity in other aspects of the economy.
Yes.
All our exports have been down, whether it's down due to poor port infrastructure, whether it's down to poor general transportation infrastructure for getting our farm produce down to the ports, or even just productivity in the terms of creating final products rather than just raw materials or raw
logistics,
traffic. So logistics, infrastructure, electricity, all these things are part of what factors into where we are today. If we had, rice mills that were producing and we were exporting rice, exporting beans, exporting sesame seeds, exporting things that would bring in FX, we wouldn't be having this conversation. Better still, if we were then refining these things and selling, value-added products, we would be getting even more money from those things, and then we would have even higher FX receipts. But that has not been the case. So it's just purely down to a failure of policy.
So, what's your outlook on the banking sector 2022 earnings that just ahead? I guess they're going to come in as soon as the elections are coming in as well.
Yeah. Okay. So
I hope folks will be watching the results of the elections rather than the earnings.
Oh no, I fully expect that based on what we've seen from the unaudited, the few banks that released unaudited results, I fully expect things to be in line with our expectations, growth across board, gross earnings down to profit after tax, and solid, hopefully solid dividend payouts.
Do you think 2022 will generally be a good year in terms of the returns that the banks will turn in?
For 2022?
For 2022,
yeah,
yes.
Sure. I mean, growth is the expectation. Regardless of how the economy has been over the last 3 years, we've still seen growth from the banks. For one reason or another, I think last year, surprisingly enough, it was purely through core banking. Maybe not so surprising because of the way the CBN was raising MPR towards the end of the year. But, I mean, at the start, we had expected more from non-interest revenue, but that hasn't materialized recently. But core banking has been very, very strong, and the banks have booked a lot of revenue from that, and not that much interest expense.
It hasn't really been an easy first quarter of the year. So, Q1, do you think we were pressured? From food scarcity to days in which banks have their doors closed?
So Q1 is a completely different story. This year, like you said, has been a little bit funny. We've seen banks shutter their operations across various regions for one reason or another. This cash policy has played havoc with the industry on many levels.
So when the numbers are coming in the second quarter, we should expect banks to take a little bit of a hit.
Well, it depends. On the one hand, the fact that obviously there's less cash in the economy means that there should technically be a lot more transactions happening on your digital channels, on your mobile channels,
but
and things like that.
Deposits. Maybe banks are giving loan on via online. I'm not too sure, but I don't know.
Sure. So that's the thing. So the banks have had to adapt. Unfortunately, what I was even going to say is that even if there has been an increase in those transactions, we've seen an overload of their banking systems.
Yes.
So that has also caused some downtime. So that could be lost revenue as well. But that's only on the NIR front. On the interest revenue front, I'd say that because MPR has continued to go up, interest rates are still quite high. They're probably still booking solid returns on that front. And maybe they're paying out higher interest expense because of the higher rate of deposits from people rushing to deposit their money in the banks. But I'd say that they're still probably coming out net positive.
I don't know how the banks survive. You are with them. You likely know how they survive. They just manage to find their way out of wriggle their way out of every tight situation.
By being very aggressive and just being at the forefront on the continent, I think.
Yes.
That's what it is.
Okay. If you're in charge of money, you likely most definitely don't lack money. But it's okay. That's it for tonight. Thank you so much for those insights. Have a great evening. Joshua Odebisi, Head of Banking Research and Analysis at Vettiva Capital Management, a licensed investment banking group.